Stop whatever you are doing right now and listen very carefully, because what happened in the markets over the past 24 hours is one of the most dramatic divergences I have ever witnessed in my career. On one side, you have the crypto market in absolute freefall. $521 million liquidated, Bitcoin crashing 6%, Ethereum dumping 9%, the fear and greed index plunging to 14 out of 100, which is extreme fear territory, traders getting absolutely destroyed, panic everywhere, blood in the streets. But on the other side, at the exact same moment, you have gold surging past $5,300 per ounce. You have silver breaking above $93 and pushing toward that magical $100 level. You have precious metals doing exactly what they were designed to do in moments of crisis. Two completely different stories playing out simultaneously. Two completely different outcomes for two different types of investors. And the reason this is happening, the trigger that set all of this in motion, is something that most retail investors are still trying to wrap their heads around. The United States and Israel just launched coordinated military strikes against Iran. Operation Epic Fury, bombs falling on Tehran. And Iran has already struck back, hitting U.S. military bases across Kuwait, the UAE, Qatar, and Bahrain. This is not a drill. This is not a simulation. This is real war with real consequences for real markets. And if you are holding crypto, holding gold, holding silver, or just trying to figure out what is happening, this is the video you absolutely need to watch today, because I am going to break down everything. What actually happened in these markets, why crypto crashed while precious metals surged, what the liquidation data tells us about positioning, where gold and silver could go from here, and most importantly, what this means for your money when markets reopen on Monday morning. Before we get into all of this, I need to ask you something quickly. If you are watching this channel and finding value in these breakdowns, take 1 second and hit that subscribe button. I check the analytics regularly, and a massive percentage of people watching are not subscribed yet. I understand you can watch without subscribing, but that subscription genuinely helps this channel grow and reach more people who need to understand what is really happening in these volatile times. We are building something important here, and every single subscription matters. Also, this is absolutely critical. Make sure you join our WhatsApp community. The link is right there in the description below. That is where we share real-time updates, breaking news, and have actual conversations about market moves as they happen. When crypto dumps 10% overnight or gold gaps up $100, you want to be in that community getting the analysis in real time, not finding out hours later. And follow us on Twitter or X, whatever you prefer to call it. The link is also in the description. When things are moving fast and I cannot get a full video out, that is where I post quick takes and breaking analysis. All right, let us get into what just happened, because this is absolutely wild and the implications are massive. Let me start with the crypto side, because the carnage there is almost hard to believe. According to market data from CoinGlass, total crypto liquidations surged by 129% in the past 24 hours. The total number came in at approximately $521 million. But here's the part that should really grab your attention. During the first 15 minutes after the news broke about the coordinated U.S. and Israeli strikes on Iran, $100 million in crypto long positions were liquidated. $100 million in 15 minutes. Think about what that means. People who were betting on crypto going higher, people who had leveraged long positions, they got absolutely destroyed in a quarter of an hour. The selling pressure was so intense, so immediate, so overwhelming that the market could not absorb it. Positions got force liquidated, stop losses got triggered, margin calls went out. It was a cascade of selling that fed on itself. Out of the total liquidations, around $449 million involved long traders. That means the vast majority of people getting wiped out were people who believed crypto was going higher. They were positioned for upside, they were bullish, and then geopolitical reality came crashing through the door and destroyed their positions in minutes. Bitcoin dropped over 6% to trade at around $63,692. Ethereum got hit even harder, dropping 9% to around $1,856. And when the two largest cryptocurrencies dump like that, the altcoin market follows. Everything turned red. Everything was bleeding. Now, let me ask you a question right now. Where are you watching from today? I am genuinely curious about how global this community has become. Drop your country in the comments. Are you in the United States, India, Pakistan, the UK, Germany, Australia, Nigeria, the Philippines, somewhere in the Middle East? Let me know, because I love seeing how far this information is spreading. And if you are watching from somewhere affected by these geopolitical tensions, I especially want to hear from you. Now let me talk about why the crypto market reacted this way, because understanding the mechanics matters. The crypto market has been in a vulnerable position for months. Open interest, which measures the total value of outstanding derivative contracts, has dropped dramatically. According to CoinGlass data, total crypto open interest has fallen from around $140 billion in January to approximately $90 billion now. That is a massive decline in positioning. It tells you that traders have been reducing their exposure, pulling back, getting defensive. The market was already fragile before the Iran strikes happened, and when you combine an already fragile market with a major geopolitical shock, you get exactly what we just witnessed: a cascade of liquidations, a collapse in confidence, and a rush for the exits. The Fear and Greed Index, which measures overall market sentiment, has been hovering in extreme fear territory. Currently, it sits at 14 out of 100. To put that in perspective, anything below 25 is considered extreme fear. We are deeply in panic mode. The crypto community has turned extremely cautious. And honestly, given what is happening geopolitically, that caution makes sense. But here is where the story gets really interesting. At the exact same moment that crypto was collapsing, at the exact same moment that hundreds of millions of dollars were being liquidated from leveraged traders, gold and silver were surging. Gold price climbed 3% over the past 5 days to trade at around $5,278 per ounce. Silver surged over 6% in just the past 24 hours to trade at around $93.70. While crypto traders were getting liquidated, precious metals investors were watching their positions appreciate. While Bitcoin was dumping, gold was hitting new highs. While Ethereum was collapsing, silver was pushing toward that psychologically important $100 level. This is not a coincidence. This is the market telling you something very clearly about where capital wants to go during periods of genuine crisis. For years, crypto advocates have argued that Bitcoin is digital gold. They have argued that in times of crisis, in times of monetary uncertainty, in times of geopolitical tension, capital would flow into Bitcoin just like it historically flows into gold. And in theory, that argument makes some sense. Bitcoin is decentralized. It is not controlled by any government. It has a fixed supply. It shares some characteristics with gold. But theory and reality are not always the same thing. And what we just witnessed over the past 24 hours is a real-time stress test of that theory. When actual bombs started falling, when actual military strikes happened, when actual retaliation was confirmed, where did capital flow? It flowed into gold. It flowed into silver. It flowed into the assets that have served as safe havens for thousands of years. It did not flow into crypto. Crypto dumped. This is an incredibly important data point. It does not mean crypto is dead. It does not mean Bitcoin will never recover. But it does mean that in this particular crisis, at this particular moment, the market voted with its money, and the vote was clear. When geopolitical uncertainty spikes to extreme levels, gold and silver are still the assets of choice. The ancient metals won this round. Now let me tell you what is actually happening geopolitically, because understanding the trigger matters for understanding what comes next. On Saturday, the United States and Israel launched coordinated military strikes against Iran in an operation being called Epic Fury. Explosions have been confirmed in Tehran, the capital of Iran. This is not a limited strike on some remote military installation. This is strikes on the capital city of a major regional power. The implications are enormous. But it does not stop there. Iran has retaliated. According to multiple reports, Iran launched ballistic missiles at Israel. Iran also struck U.S. military bases across the Gulf region, hitting installations in Kuwait, the UAE, Qatar, and Bahrain. This is not a one-sided attack. This is an exchange of fire. This is escalation. This is multiple countries getting drawn into what could become a much wider conflict. The fears of a prolonged Middle East war are intensifying by the hour. More countries are being drawn in. The risk of a regional conflagration is higher than it has been in decades. And when that kind of uncertainty is in the air, when bombs are literally falling, investors do not want exposure to volatile, speculative assets like crypto. They want safety. They want the assets that have proven themselves over centuries. They want gold and silver. Now let me talk about what this means for precious metals prices going forward, because the setup is incredibly significant. Gold is currently facing resistance at around $5,300 per ounce on COMEX. That is the level the market is watching. If gold manages to break above that hurdle, if it can push through 5,300 and sustain above it, analysts are projecting significant further upside. In India, that could translate to prices climbing to 1,68,000 to 1,70,000 rupees per 10 grams. For those using dollar pricing, we could be looking at a push toward 5,500 or even higher in the near term. But here is what makes this moment particularly powerful. Gold just had its best month in history in terms of raw dollar gains. February delivered an 11% return for bullion. That is $516 added per ounce in 28 days, the largest nominal monthly gain ever recorded, and that was before these military strikes happened. Now we have a fresh catalyst, a fresh surge in safe haven demand, layered on top of an already powerful uptrend. When markets reopen on Monday, gold will need to price in everything that has happened since Friday's close. The strikes on Iran, the retaliation against U.S. bases, the explosions near critical oil infrastructure, the uncertainty about what comes next. The first price discovery will almost certainly gap higher. The question is by how much. Silver's setup is equally compelling. Silver closed Friday above $93 per ounce. It has shown strong momentum, outperforming gold on a percentage basis over the past week. The key level everyone is watching is $95. If silver breaks and sustains above $95, experts believe it will regain the $100 per ounce mark. In India, that could translate to prices touching 3 lakh rupees per kilogram. Let me put silver's potential in perspective. At current prices around $93 to $94, silver is just 6 or 7% away from that magical $100 level. A 6% move in silver is absolutely achievable, especially in an environment of heightened geopolitical tension. If gold continues higher and the gold-silver ratio compresses, silver could actually outperform gold by a significant margin. And remember what analysts have been projecting for the larger cycle. If gold reaches $8,000, if we get a parabolic blow-off similar to what happened in 1979, silver could potentially surge to $200 or beyond. Those numbers sound outlandish until you realize that silver has already more than tripled from its lows, and the fundamental drivers remain firmly in place. Are you holding gold and silver right now? Are you holding crypto? Are you holding both? Drop your positioning in the comments because I am genuinely curious how this community is allocated. Understanding how you are positioned helps me create more relevant content. Now let me address the elephant in the room. The divergence between crypto and gold in this crisis tells us something important about how these assets are actually perceived by the market. Crypto has struggled to benefit from rising global liquidity. Despite M2 money supply expanding, despite all the talk about inflation hedges and store of value properties, capital has not been flowing into crypto the way it has been flowing into precious metals. Instead, investors have been seeking refuge in the precious metals industry, led by gold and silver. The crypto market has been trapped in a bear market sentiment similar to 2022, with the fear and greed index hovering in extreme fear territory. This does not mean crypto cannot recover. Markets are cyclical. Sentiment can shift. What looks hopeless today can look promising in 6 months. But right now, in this moment, the market is making a clear statement. When the chips are down, when bombs are falling, when uncertainty is maximal, gold and silver are where capital wants to be. The open interest collapse in crypto markets is particularly telling. Going from 140 billion to 90 billion represents a massive deleveraging. The speculative excess has been wrung out. The tourists have left. What remains is a market that is defensive, cautious, and vulnerable to further downside if the geopolitical situation continues to deteriorate. Meanwhile, gold and silver are experiencing the exact opposite dynamic. Capital is flowing in. Premiums are holding up or expanding. Physical demand remains robust. Central banks continue accumulating. The structural bid that has been building for years is now being accelerated by this geopolitical crisis. Now let me talk about what happens next because markets will reopen and you need to be prepared. When markets open on Monday morning, we are going to see significant price discovery. Gold futures will need to price in the weekend's developments. Silver will follow. Crypto markets, which trade continuously, have already been reacting in real time, but the full impact may not be felt until institutional players return. For gold, the immediate resistance is at 5,300. If that level breaks, the next targets are 5,450, then 5,500. Technical analysts are pointing to potential for much higher prices if the geopolitical situation continues to escalate. The fundamentals were already bullish before this weekend. The strikes on Iran are additional fuel on an already burning fire. For silver, watch the $95 level very carefully. A sustained break above 95 could trigger a rapid move to 100. And once silver reclaims 100, psychological momentum could carry it significantly higher. The silver market is much smaller than the gold market, which means price moves can be more explosive in both directions. For crypto, the outlook is more challenging in the near term. With the fear and greed index at 14, with open interest at multi-year lows, with geopolitical uncertainty at extreme levels, the path of least resistance may be lower. That does not mean you cannot make money in crypto. Skilled traders can profit in any environment. But for the average holder, this is a difficult time that requires careful risk management. Let me ask you something important. When you saw Bitcoin dump 6% and gold surge to new highs at the same time, what was your gut reaction? Did you panic about your crypto holdings? Did you feel vindicated if you owned gold? Did you consider rebalancing your portfolio? Your emotional reaction to these moves tells you a lot about whether you are properly positioned for your risk tolerance. Now let me bring in the human element because this conflict is affecting real people in real ways. The Embassy of India in the UAE has issued an urgent advisory asking all Indian nationals in the United Arab Emirates to avoid unnecessary travel, take due care, remain vigilant, and follow safety guidelines. This is not abstract geopolitical analysis. This is governments telling their citizens to be careful because the situation is dangerous. When you see embassies issuing warnings like this, it reinforces how serious the situation has become. This is not market fear over nothing. This is genuine, real-world conflict with real consequences. The market reaction, with gold surging and crypto dumping, reflects that reality. For those of you watching from the Middle East region, please stay safe. For those with family in affected areas, I hope they are okay. Markets and money matter, but human safety matters more. Now let me zoom out and talk about the bigger picture because this moment fits into a larger narrative that has been building for some time. We are witnessing what could be the beginning of a major asset rotation. For years, crypto attracted speculative capital looking for asymmetric returns. The promise of decentralization, the narrative of digital gold, the potential for massive upside all drew investors in. But as we have seen repeatedly, when genuine crisis hits, that speculative capital flees to traditional safe havens. Gold has been in a secular bull market that keeps making new highs. Silver has been following with even more volatile but directionally similar moves. Central banks around the world have been accumulating gold at record pace. The structural drivers, dollar weakness, fiscal deficits, geopolitical uncertainty, inflation persistence, are all still in place. What we might be witnessing now is an acceleration of a trend that was already underway. Capital that might have been split between crypto and precious metals may increasingly concentrate in precious metals. The crisis is forcing investors to choose, and based on the last 24 hours of price action, many are choosing gold and silver. This does not mean crypto goes to zero. It does not mean Bitcoin never recovers. Crypto has survived multiple crashes and emerged stronger. The technology is real. The use cases are real. The network effects are real. But in terms of safe haven competition, in terms of crisis performance, gold and silver just proved their worth once again. Now let me give you some practical thoughts on how to navigate this environment. First, understand your time horizon. If you are a long-term gold and silver holder, this crisis is validating your thesis. You are holding assets that perform when uncertainty spikes. Stay the course. Do not let short-term volatility shake you out of a position that is working. Second, if you are holding crypto and feeling stressed, assess your position size. Are you overexposed? Can you handle more downside? The market could drop another 20 or 30% from here if the geopolitical situation worsens. Make sure your position size allows you to ride out that volatility without making emotional decisions. Third, consider your overall portfolio allocation. The divergence between gold and crypto in this crisis is a data point worth incorporating into your thinking. How much do you want in each asset class? What is the right balance for your risk tolerance and goals? Fourth, stay informed. The geopolitical situation is fluid. Things could de-escalate or they could get much worse. Having access to real-time information matters. That is why I keep emphasizing the WhatsApp community. When major developments happen, you want to know immediately, not hours later. Fifth, do not try to time the exact bottom or top. Markets are impossible to time perfectly. Focus on having the right allocation at the right time in your life. Dollar cost averaging into positions you believe in over time is a more sustainable strategy than trying to call every twist and turn. What is your strategy for navigating this crisis? Are you buying the dip in crypto? Are you adding to gold and silver positions? Are you staying on the sidelines and waiting for clarity? Drop your approach in the comments. I want to know how this community is thinking about the opportunity. Now, let me talk about what signals I am watching going forward, because this situation is evolving rapidly. First, I am watching the scope of the military conflict. If this remains limited to the current exchanges, markets may stabilize after the initial shock. If it escalates further, if more countries get drawn in, if critical infrastructure like oil facilities are damaged, the flight to safety will intensify and gold could gap up much more aggressively. Second, I am watching oil prices. Explosions near Karg Island, Iran's main oil export facility, could mean supply disruptions. If oil spikes, it adds to inflation pressures, which supports gold. Energy markets and precious metals markets are connected during geopolitical crises. Third, I am watching the dollar. A flight to safety can sometimes strengthen the dollar in the short term as capital flees risk assets. But the underlying fundamentals, huge fiscal deficits, falling real yields, central bank gold accumulation, are bearish for the dollar over time. Watch which force dominates. Fourth, I am watching crypto market structure. Is open interest stabilizing or falling further? Is the fear and greed index finding a floor or continuing lower? Are there signs of capitulation that might indicate a bottom? These indicators matter for understanding when the bleeding might stop. Fifth, I am watching physical precious metals premiums. If premiums spike, if dealers report supply constraints, if physical demand surges above paper market supply, it signals intense real-world demand that supports higher prices. Sixth, I am watching diplomatic channels. Any sign of de-escalation could reverse some of the safe haven flows. Any sign of further escalation could accelerate them. Geopolitics is inherently unpredictable, so staying humble and adapting as new information emerges is crucial. Let me also address something I have been seeing in comments and messages lately. Some people are asking whether now is a good time to buy gold and silver given how much they have already rallied. Is it too late? Have I missed the move? Here is my honest perspective. When I look at an asset that just had its best month in history, when I look at a metal trading at all-time highs, my first instinct is also to wonder about buying at the top. That concern is valid. Nobody wants to buy at the exact peak. But here's the counter-argument. Gold's structural bull market is being driven by forces that have not gone away. Central banks are still accumulating. Real yields are still falling. Fiscal deficits are still expanding. The dollar is still weakening. Geopolitical tension is still rising. Those forces do not care that gold just had a great month. They continue operating. Moreover, what seems expensive today might look cheap in hindsight. Gold at $5,300 seems high until you consider the analysts projecting $8,000. Silver at $93 seems elevated until you consider the projections of $150 or $200. The question is not whether gold and silver are at all-time highs. The question is whether the drivers of those highs are still in place. And from my analysis, they are. That does not mean prices go up in a straight line. There will be pullbacks, corrections, and scary moments. But the trend appears intact. For those worried about buying at highs, consider scaling in over time rather than making one big purchase. Dollar cost averaging reduces the risk of terrible timing while still giving you exposure to the upside. Now let me bring this to a close with some final thoughts because there is a lot to digest here. What we witnessed over the past 24 hours is a stress test of different asset classes in a genuine crisis. Crypto failed that test. Gold and silver passed. That is not opinion. That is observable market behavior. $521 million flowed out of crypto through liquidations. Meanwhile, gold and silver surged to new highs. This does not mean you should sell all your crypto and buy only precious metals. Different assets serve different purposes in a portfolio, but it should inform your thinking about how these assets actually behave when things get serious. The narrative that Bitcoin is digital gold is not currently being confirmed by market behavior. In a real crisis, real gold is outperforming digital gold by a wide margin. The geopolitical situation remains extremely fluid. The strikes on Iran and the retaliation against U.S. bases represent a significant escalation. How this develops over the coming days and weeks will have enormous implications for markets. A de-escalation could see some of the fear premium come out of gold and some of the panic selling reverse in crypto. Further escalation could send gold to new records while crypto continues to struggle. Stay informed. Stay rational. Do not make emotional decisions. Have a plan. And most importantly, understand what you own and why you own it. If you cannot articulate your thesis, if you cannot explain why you are holding a particular asset, you are likely to make poor decisions when volatility spikes. I want to hear from you before we wrap up. Do you think gold breaks 5,300 and continues higher this week? Do you think silver reclaims $100? Do you think crypto finds a bottom or continues lower? And most importantly, what are you doing with your portfolio in response to these developments? Drop all of this in the comments. I read every single one, and I love engaging with this community. If you have had success navigating this volatility, share your story. If you were positioned correctly in gold and silver before this weekend, tell us how you were thinking about it. If you learned a painful lesson from the crypto crash, share that too. We learn from each other. Make sure you join our WhatsApp community. The link is in the description. That is where we discuss these moves in real time as they happen. When gold gaps up on Monday morning, you want to be in that conversation getting the analysis as it unfolds. Follow us on Twitter or X, also in the description. That is where I post quick updates when breaking news hits. And subscribe to this channel if you have not already. Hit the notification bell so you do not miss the next video. This is going to be an incredibly volatile week in markets, and you want to be prepared with the best possible information. We are living through historic times, war in the Middle East, crypto crashing, gold surging. The market is making clear choices about where it wants capital during crisis. The question is whether you are positioned on the right side of that flow. Stay safe, stay informed, stay positioned. I will see you in the next one.